Welcome back. Early today, the New York Empire Manufacturing Index was released. What it does is it rates a relative level of general business conditions in New York State, specifically speaking to the manufacturing index. We went down to a negative 4.6, which on the surface doesn't seem like a huge number, but we'll see there's actually kind of a troubling pattern. Levels above zero indicate improving conditions and below zero worsening conditions. Again, today's report goes to a negative 4.6. We can see the yellow histogram bar shows the Empire State Manufacturing Index. Again, this specifically reflects the state of manufacturing in New York State. 4.6 is a negative. It's slightly worsening against the S&P 500. We see a positive correlation as manufacturing improves, so do stocks. And conversely, when one index goes down, the other usually tends to follow. Here's the Empire Manufacturing Index versus the 10 and 1 year Treasury bonds, the 1 year in blue, 10 in red. And interesting, we can see we had quite a positive state of manufacturing in 21 and early 22, but at the beginning of the inverted bond market condition around June of 2022, that's when the manufacturing really went to the downside. We hit levels of minus 30, even a little bit below that, consecutive reports. And as we continue with our inverted bond market condition, although the red line, the 10-year, is trending higher, the 1 year is still higher, and that is inverted. We see a continuous negative manufacturing number over time. Now, here we see this is a long term chart of the Empire State Manufacturing Index going back to 2003. And what you'll notice is the vast majority of the time we see this index in positive territory. 2003 through 2007, positive continuously through. Of course, the financial crisis in '08 led us to a couple of years of negative numbers, but then it was positive once again. And except for a couple glitches along the way, we had really positive indications above positive 20, positive 30 until 2014, 2015. We had a little bit of a downturn, but then again, 2017, 2018, those look like positive numbers. The COVID crisis, so we saw a big dip. What's troubling is that we've seen going back to let's say mid 2022, the beginning of the inverted bond market, about 15 months ago, we've seen almost continuous negative reports with very little reprieve. This is about 15 months of negative manufacturing conditions. I think it's even longer than what we saw in the financial crisis. Now, maybe not to the same depth, but certainly the duration. Here we compare on the left-hand side, this is 2006 through 2007. And what we can see is that we had the advent of the negative manufacturing index around 2007, December-ish, fourth quarter, and then we saw that persist till early 2009. Compare that to where we are now, we've seen a greater amount of time with negative manufacturing numbers. Now, maybe not to the same depth. We were near a negative 40 in 2008, 2009. We're not at those levels, but certainly the duration of negative numbers is troubling. And we should also mention that, these manufacturing numbers, they're certainly sensitive to higher interest rates. Manufacturing is an interest rate sensitive industry. And if not the manufacturers, those of us who purchase things and you manufacture, especially those big ticket items, those are certainly very sensitive to financing and interest rates. So, as long as we see interest rates remain near these historic highs, and especially with the inverted bond market condition, it doesn't seem likely that the situation is early or it's going to quickly change. But we're going to, keep a close eye on this. And of course, coming up, we also have the Philly Fed Manufacturing Index that will, also give us some insight into the same industry. We hope this has been helpful. We look forward to seeing you back soon.